Welcome to Wise Beyond Bitcoin, where you come for the crypto neo news, education, opportunities, and macro updates. My name is Lucas.
And my name is Ryan.
And we've got a major macro update because, well, we've been following blockchain and crypto for quite some time. None of this is financial advice, even though we're going to start talking about securities and where crypto falls. This is not commercial legal advice. It's just educational, entertainment information. So we like to talk about blockchain and crypto as a part of the economy, as a new technology that's emerging, how blockchain Web 3.0 works. We do talk about different crypto projects and the innovations happening, but we also like to talk about where it fits in the modern economy at large. You know, where's the creative destruction and how is it being received by people in various institutions? And that's really kind of where we're coming to, and what this video is about. Is crypto in general a security, whether proof of work, proof of stake, layer ones versus applications? We're going to get into that and explain a little bit about why this conversation is so important, because really this could be the end of innovation and investment of resources and time into these industries, or it can absolutely direct the flow. Now, I'm leading into this, I'm going somewhere. What's so revolutionary right now is that blockchain and crypto is just now being understood, and just a couple years ago was ignored completely, especially a few years ago was completely ignored. And now we are at a place where the Security Exchange Commission, the SEC, maybe the CDTC, and other entities are out there, people working for different organizations, making laws or working to make laws and pass laws that will affect cryptos. So blockchain, the technology, seems to be here to stay, or in its infancy as far as the general outlook. The question is what is it? Because there's not a lot of talk about what it is and how it works and why it's so special. What is crypto blockchain? And should we lump it in and just consider it a stock market, a stock and a security as traditional market goes? Or is there room for something new?
Yeah, well, that's kind of the question, right? I think it's it's interesting that we've been told the last few years that when regulation comes to crypto and sort of creates a system of rules that the institutions can live by, that's going to create a lot of certainty, and it's going to get a lot of adoption because there's all these people waiting on the sidelines to kind of flood in, but they're scared because they think it's like a wild west, and they're fearful of various things. And the argument is that, okay, well, once regulation comes, then it's going to unleash all these investors, and we're going to see a crypto renaissance, right? A massive explosion in adoption and price. And while that might have there might be some merit to that line of thinking, it's also, and just as likely, that the wrong kind of regulation could really have the opposite effect and stamp out a lot of these projects. They would literally just become illegal and go away. So I guess the question is what kind of regulation is coming, and what, will it be the kind that creates certainty and improves upon the market and still leaves space for innovation, but kind of protects people from the frauds and the Ponzi's and the things that we can all agree are wrong? Or is it going to be this heavy-handed thing that serves the interests of maybe a few big players and essentially puts more points of control and back onto crypto, and kind of brings it under the good old boy club that the rest of the market and the financial markets kind of operate in?
Well,
It can go either way.
That's a good segue into the beginning of this article, which we will leave all links below, so you can do your own research and take a look at these. But the writer of this article, I still find it extremely weird to see crypto investors, he calls it, openly ask for damaging and restricting regulations inside the space. Well, why would they do that? Because if people consider themselves crypto investors, if they can get a regulation in their favor that treats crypto as an investment tool, or prevents others, then they can benefit themselves without regard to how it's going to affect the investment or the growth of the
Of
technology
others.
itself, right? So, and
Yeah.
I've thought about this for quite some time. We've seen this from certain people with vested interests, like Michael Saylor, who was the CEO of an investment company that was regulated. It was, a traditional entity for all intents and purposes, and yet it in they used their he used his is that purchasing power to invest in blockchain and crypto. They bought in, he bought into Bitcoin. It was one of the biggest Bitcoin advocates for Bitcoin because he openly owned it, openly purchased a lot of it, and said, look, this is a great asset or security, whatever you want to call it, and actually commodity or universal property. He called it many different things, but
Yes. But he did not want to call it a security.
no, he did not want to call it security, but he did want to call Ethereum. We'll get into this article, but he did want to call other cryptos. Basically, every other crypto was bad except for Bitcoin in his eyes.
Yeah.
And of course, he had a vested interest. And so that's where we're seeing certain people who are crypto investors who are creating a lot of negative outcomes in the space. I mean, for their own personal interest, they would like to see
They're
their investment.
pursuing their own personal ends at the expense of what's in the community interest, right?
And correct. And if you look at it, Michael Saylor or a Mark Cuban or an insert another pop culture mainstream large investor, they're just really what makes blockchain and Bitcoin, these projects, so remarkable is they're really just another man or woman who has a wallet that's able to tap into a worldwide network that's decentralized that anyone can have access to. What, even though they may get a lot of attention through the media and every time they talk, the reality is that they're just private keys, whether a Trezor
Yeah.
or a Ledger, cold storage, if they're being safe, but or whatever wallet. But the point is that that's what makes this new technology so robust and so rich, is that it has security and it's decentralized and anyone has equal access to it.
Yes.
So
Well, I think let's hone in on that decentralization aspect of that, because I think that's really what this turns on. If you scroll just a little further, we can start talking about maybe a little bit of what about what's involved in deciding whether or not something is a commodity or a security. And under this heading of short and sweet securities 101,
okay,
we're
before
looking
we
at, yeah, go ahead.
take a look at Michael Saylor's quote, just as we get into that, because he was determining what he,
Yeah, let's not skip over that.
yeah.
So we're looking at hard forks. That's what he's talking about, is that protocols have hard forks. They change the protocol. They make it, that means that there's a development team making a decision. And the argument is that if you can change the protocol like this and with a fork, that you're also changing the monetary protocol and the issuance pattern or the inflation rate of that token, which has an impact on its value. And so the argument is that brings that investment under securities law. So really, what's the standard Michael Saylor is holding up? It's the presence of a hard fork.
which
And
which we have an article here, but the point is that he was a Bitcoin maximalist, saying Bitcoin should be considered its own thing and everything else that comes after it should be considered a security because they're not perfect. But the
they're
reality,
forked.
Bitcoin has
Yeah.
been forked and has had bugs and needed to make adjustments for the security and for the salvation of the network. So, what the point of this isn't that Bitcoin's bad. The point is that if if we would like to see this technology succeed, don't create artificial standards to judge other blockchains. And we should look to find those exploits in those bugs so that we can fix them and patch them. You don't say, look, the tire is a flat tire, let's get rid of cars. Cars should never exist. It's like, no, let's patch the flat tire. Let's figure out how we can prevent more flat tires and move on.
That's a good segue. That's a good segue to what I was going to get into in the next passage. So and this is under that heading of a short and sweet securities 101. That's right below the quote you were highlighting.
Oh, did I go past it already?
Or maybe it's, yeah. No. Actually, it's above the part you were in. I'm sorry.
I was ahead. Oh, there we go.
You went a little further than I did. Yeah. Cool. So let's get into this. So a security is an investment in which an investor expects a return on profit from a common public enterprise, where at least some of the profits come from the efforts of a promoter or a third party. And this is to be juxtaposed or compared to a commodity, which is very different. You're not giving when you buy a commodity, you're not given a share of ownership over a corporation or control over it. You're just buying the rights to a good or a property. You're buying just some asset, right? Mm-hmm. You're not getting any share of a corporation or a right to control any kind of a corporation. So what this is really kind of getting at is that a security is necessarily bound up with a public enterprise, or which is a centralized entity, and it's an entity to the degree that there's a charter and there's a clear hierarchy of positions and responsibilities, whether we're talking about CEO or board of directors or and so on. So really the question that we're being asked that we're all looking at, and that the government's is going to decide, is it necessary for there to be some existence of an entity, like a corporate entity, for a security to exist, or is it enough that somebody is profiting off of some network effect? Is it enough that there's a development team that can make changes to a protocol and then leave it up to the community to decide whether or not to adopt those changes, right? Whether it's validators or miners. So the question is how centralized of an entity does this need to be? And do blockchains with development teams and forks and community decision making, does that actually compromise? Does that compose an entity? Is that even an entity itself, or is that something else?
And people can determine how they want to define something, but is that going to benefit? What happens if you determine that any layer 1 proof of stake token is a security? Now you've pretty much you're ruining the strength and the robustness of the decentralized nature of these networks. And now you're taking something that was what made it so strong was its decentralized, robust nature. And now you're making it to where it needs to be ported through a centralized entity to be regulated in order for it
charters.
To be used. So here's the example. Cars are invented to replace certain horses and buggies. And people say, okay, well, if you're going to have a car, it needs to be pulled by a horse and buggy. And that's basically by forcing these new decentralized secure networks that allow anyone in the world. It's like a public park, a public roadway that allows anyone in the world to build and add value to see if other people would like to interact. And sure, maybe of these applications and tokens built on these networks, maybe they are companies that are raising funds like ICOs. Maybe they are relative securities or investments in that regard. But layer 1s themselves, when you look at Ethereum or Bitcoin or other proof of stake, there's something about understanding that securing a network to allow exchanges to be a part of that security feature is not, you're never giving up to a third party. It shouldn't, to consider that a
Yeah.
security
Well,
or
it's the network effects. Because we're talking about is that the security that you provide value by securing the network, and that creates that actually creates the entire ecosystem, right? If without those actions, then that network would not exist. So it's very, the profit is not so much or any kind of guaranteed monetary profit, more of a psychic profit. Like you're getting this the benefit of knowing that you're helping to create this decentralized truth telling machine, this decentralized ledger, right? And so it's more like it's not so much that you're getting a benefit of a reward in money terms. You may, I mean, you may stake and do good, but you may lose just as easily.
right.
But it's more about, we're trying to create this together, right? And this is how we do it. There's no other way to do that.
And this is just funny. And this is the problem when you try to take a new technology that requires new language, new understanding, and you try to force it through an old paradigm. Michael Saylor on why Ethereum is inherently unethical. It is inherently unethical because its existence violates securities laws, which I just think
Which
that,
have their basis in the Ten Commandments.
but to say that their existence violates securities laws is a stretch and is funny. I mean, he's gone on to call
That's what needs to
Bitcoin.
be decided, right? That he's
Sure.
begging the question. That's
Right.
what,
Right.
yeah,
Exactly.
because that's what violates securities laws is whatever the courts deem is a violation of
But what's
securities
funny is
laws.
that Ethereum is just a protocol. To say that Ethereum itself is inherently
Yes,
unethical is ridiculous, because all Ethereum is a protocol that allows anyone around the world to build whatever they want. You may say that Uniswap is on it. You may say that something else built on Ethereum is unethical or is shady. But to say that the road is unethical because of who may drive
right.
it or who may be driving on it, it's
Well,
just
to add to
ridiculous.
that point is that Ethereum is a global protocol with, it's basically it's not bordered, it's not rooted in one nation. It's global, it's for the world. And securities laws, I'm assuming he's talking about US security law, which would only apply.
Oh, you froze up a little bit there,
Oh,
but
I'm
you
sorry.
say it again, because you brought up a huge point that's not being talked about. Is what does this do to men and women who are looking at this as a public good, as a new technology to add value around the world? Like, if you're
Yeah.
living in different places, how is it fair that some people in a political position of authority right now can make a decision in the United States based upon a securities law or something
That
else
applies to somebody else who's
that
not a
applies
citizen.
to Ethereum or these networks for the world? And so,
Well, it's a lot
hope.
like people being punished for for others who were criminals using Tornado Cash, right? And now they find that their actions have been criminalized, and because of some criminals in another part of the world, right? So it's that same kind of dynamic of applying, misapplying the law to people that it shouldn't apply to, right?
Right. And we'll talk more about that, because that's a travesty, and it's really a travesty, and it's being brushed under the rug. Hopefully more people learn about this and speak up. But
Yeah,
Bitcoin, Ethereum, they're great revolutions in secured data storage and being able to send it without third parties. But the public blockchain is a problem when it comes to information or financial information or other types of data storage. People like to not have their medical records or their bank accounts seen
right.
by the whole world. So when you look at Tornado Catch, which was just a new baby way, just a brand new application built on this very, very um, you know, I want to say young, what's for lack of a better term. It was definitely, Ethereum is young. Ethereum, the
Yeah, in the
network,
grand scheme.
is young. And so you look at this application that was created that unlike BitConnect or scams or frauds, what's not being talked about is Tornado Cash didn't scam anybody. The
No,
builders didn't create a
it
bug
wasn't a rug pull.
to steal
No.
people's money. It wasn't a rug pull. What's such a shame is that the people who built it should be rewarded or should be looked at in a positive way by society for being able to build a protocol that allows for privacy to exist on these public blockchains. You would think in the
Yeah,
future that even a Visa or MasterCard or whoever wants
would
to
value
step
that.
in and take over, that they would use a Tornado Cash application for their users to make payments at Starbucks or somewhere that
Yeah,
people wouldn't be able to go track their
sure.
accounts.
There
So
there are legitimate uses for this technology.
yeah, and so for people working in the government say, we've been monitoring this brand new application that almost nobody knows about and is barely being used, and we've determined that some criminals in Korea or somewhere else in Russia or whatever are using it, then if you know the criminals are using it, then you go after those criminals,
Yeah.
or
Blacklist those wallets.
blacklist
Yeah.
their wallets. But to sit there and say, what blows my mind, this is a side, we need to move on, but we'll do a whole video on this. But Tornado Cash, which is a shame, is that, and I'm just glad I didn't use it, although we made videos
Yeah.
about it. And I thought about it at some point in time. I thought, you know what, in the future, I want to put a whole bunch, whatever, if I ever get a whole bunch of whatever on Tornado Cash, because I thought would be great to not have people who watch videos or know me or said things in the
No,
past. Wouldn't it be
know your
great
whole
to
know your
have
business.
a crypto wallet for that people don't get to peer into and know
Yeah.
about? So but what's a
Well,
shame is
let's
that
let's
you
go back to what we are talking about, because Tornado Cash, has it's ended, right? That protocol is
well, it
dead,
still exists. The protocol, it's an application that anyone can access, but there has been a de facto law
banned,
passed
right?
that sanctions, that
Yeah.
says if you're a US citizen and you use it, 30 years in prison and $10 million. So, I
Yeah.
mean, look, there's murderers and rapists and
That
people
don't
who
get that punishment.
thieves and people who do horrible things. It's like, and they don't get that punishment. And it's just a shame that you have somehow created a criminal class. I feel bad for all those US citizens who thought Tornado Cash was a great project and they put Ethereum in there for their own private personal reasons. And now they're basically, I
Yeah.
guess it's stuck or lost unless
Well,
there's.
I guess to bring it back around, what I would say is, how this security commodity question gets decided has huge implications for, we're talking about the end of a lot of protocols, maybe everything but Bitcoin, if depending on how the rules, are written. So what that and that I think that has like big rule of law questions that come with it.
Mhm.
Like, there's a I don't want to get too constitutional on you, but there's a part in the Constitution that says that the government can't take property without compensation, right? That's why eminent domain is a thing, instead of them just taking it and not giving you anything. It's the takings clause in the Constitution.
Mhm.
So to bring this back to crypto, what I'm wondering is that if some new decision were to come down, basically saying all these crypto projects are securities, they would be essentially rendered out of reach for U.S. citizens, and then essentially all those citizens would be losing all whatever tokens and wealth and value they had tied up in those assets. Isn't that a pretty clear taking, considering that we're not talking about a old law that people violated, but they're actually creating new laws and then applying them retroactively, right? So I feel like there's rule of law questions here, there's constitutional questions here, on top of the economic, dimension that we're dealing with.
That's a great point. And that's how early we are. I don't even know who from the US Secretary of Treasury, there's not even a name of the man or woman who just came out and said, this is the law and we're sanctioning anyone. So, where is the process that people get to say, I mean, who gets to make a law? Usually there's a
Yeah.
process for a law to get passed that affects people on this on this grand scale. So to
And the jury, how about right to hear the charges against you, the right to a jury trial? Like, there's a few things that would need to be,
I could see a legal challenge, a lawsuit going against whoever makes this law, because under what authority and what and for what purpose was this law, and to whose benefit was it created? So yeah, it is interesting to see what goes on there. But from this article to a link, clearly the trying to define cryptocurrency or blockchain projects as a security is a stretch. And this point of this article is why they should, if you're going to try to fit them into one of the two categories, then a commodity is a better fit.
yeah, I think so. My big, what I get hung up on is that there is not a public entity that is involved here. There's no, it's not an entity. An entity, I would think, means legal entity, and I think that would mean some kind of a corporate charter, some kind of LLC, something you're being a part of. And if not, then I just wonder, what are they talking about?
Well, that's why a commodity is a better
Yeah,
fit than a security. And that's the point of this article. He agrees with you. He would say that it's really a stretch. It's a real stretch to all of a sudden call cryptocurrencies securities. I mean, it may benefit the SEC and a bunch of administrations and bureaucrats that can profit off of regulating
yeah.
and monitoring and saying, but does it really make sense to call it a security? Probably not. And that's why, we're big on, this is a channel for education, and knowledge is power. So let's educate each other, educate our friends and family, and, your political and your jurisdiction, whoever it is, those figures that make decisions and are unpacking and learning this, be a voice, send them a message. And, this is about making the world better for all of us. How can these projects, these protocols flourish, that we can see some robust, the idea is that if the airplanes were first being invented, would we have wanted airplanes being regulated by the horse and buggy or automobile industry? Or would we like to see airplanes have their own space to do research and development, and see if we need to add
Right.
flaps, and see if we need to add this on the tail, and do this? And there's a need
Leave it
sometimes.
open to experimentation, right?
We need to allow for experimentation. We need to allow for these networks to grow. And one of the last points we'll make in all this security or commodity talk, you buy gold, you're sitting on gold. You invest in a security into a company, you're investing in money into something where people are in charge of it, and they're trying to market it, Rumpelstiltskin it in some way for you, that you can have some return. But when we're talking about these new innovative blockchain cryptocurrencies, we're talking about decentralized networks like roadways that allow for email or other kinds of applications in the future. I'm saying data storage like medical data or anything.
Yeah.
We're talking about these new decentralized ecosystems where if you're a miner or if you're a staker, then you are necessary for any of these exchanges or applications to function, and for people to be able to use these wallets. So, there should be a protection. There should be an allowance for those who are not giving up. It's all done through smart contracts. They're maintaining their wallet, their keys. They are
Yeah.
choosing to forego current benefits. So they're not profiting. They're actually giving up. They're giving up and locking up something of value in real time that allows other people, the network, to transact. And there's a
That's right.
limitation for the security of that network on how much at any given point can be taken back. So what Bitcoin is given to miners and proof of stake networks pay out inflation to stakers. But the point is the same, is that the inflationary token is the mechanism that gets rewarded, but it gets given out for those who are allowing those transactions, supporting those transactions take place. So
Right.
if we're going to come out with regulations and laws that help people and protect people and make sure that this is a healthy ecosystem where there's not fraud and malicious behavior happening, then let's pass laws and regulations that will promote the growth, right? And not hamper
Yes.
and not prevent
Well,
it.
I think, we can wrap up by mentioning this bill. There's a bipartisan bill that's it's in the works right now, and it's going to basically create two tiers for crypto. You'll have one of the tiers would be or categories would be digital asset or digital security, and that would include the equity, debt, or other types of securities, right? And that would be, those assets would be regulated by the SEC. And I think things like BitConnect and the other more centralized black box projects, they would definitely fall into that category. And then you'd have another category that would be things like digital, would be called digital commodities, and those would be regulated by the CFTC, the Commodity Futures Trade Commission, which would be a much looser, more hands-off. So I think this is the kind of framework we need. It doesn't need to be a one size fits all. We don't need to try to find ways to pigeonhole or to shoehorn every crypto project into the security bucket, to make the Michael Saylors of the world happy. It would be much more rational for the projects that are more like commodities to have that track to where they can be regulated by the CFTC, and for the ones that do fit that standard of being a centralized entity, maybe like the ICO projects would come closer to that, then fine, let the SEC handle that. But I think having this two-tier approach, it kind of does what we were asking for, is it leaves space for those protocols and projects that aren't centralized to be able to be classified as commodities and to continue innovating and to continue seeing what kind of things they can build along the lines of a network effect and community active and participation, right? The DAO model, right? So to have that pathway, that's important. So I would say, make whatever calls or emails you want to your to your political representatives, but whenever this is up for debate, it'd be good to let people know that this is the more rational approach to regulation.
And speaking of rational approach, it's what one of the major takeaways is how the Howey test, why it should not apply in this case. And that's because in general, it was made for centralized assets, like you mentioned earlier. And crypto blockchain, what's so remarkable about this new technology is that it's a decentralized network. So why would we run a test that says, oh, look, it passes all the features of the test, even though this test was made to monitor and protect against centralized entities. And now we've got these decentralized assets or decentralized networks. So there's that. We'll also leave a link to this, although none of this is legal advice or commercial advice. And Investopedia surely isn't going to be the ultimate definition. This is going to be a legal question that's going to be brought out in other arenas. And hey, you know what?
Right.
Maybe they do come out and print out Investopedia, but either way, just to get yourself an idea of what the conversation is all about. And if you want to hear more conversations going on about the innovations in blockchain and crypto, we actually do videos talking about actual crypto blockchain projects. We also have videos to walk you through if you're new and you'd like to take this bear market time to learn Web 3.0 and get started. We've got some playlists there. We'll talk about NFTs. We'll talk about privacy. We'll talk about whether or not it's a security or a commodity as we learn more. Hit the subscription notification bell. Drop a comment if you'd like. And if there's some other amazing project happening, we'll definitely leave a link here or there or somewhere to Tornado Cash video. That's a very hot conversation.
Yeah.
And
yes.
What else? Anything else, brother?
Look out for the macro updates. We'll have
yeah.
one of those coming in the next few days.
Definitely love the macro updates.
Yeah. Until next time.
Have a beautiful day. Namaste, y'all. Wait a second, because There we go.